Continuing with Chapter 2, page 37, Work Together 2.2. This time we're going to be using examples of different business transactions for Kathy Bergham's company. And on April 1st, received cash from owner as an investment, $5,000. Most important thing to remember is that every transaction is going to impact two or more accounts, never just one account in isolation. So in this instance, cash is impacted. It's increased $5,000, so the normal balance will be a debit. And the other side of the equation, Kathy Bergham capital, that's her owner's equity, is going to increase $5,000, and that's on the right side of the equation, so we credit it, $5,000. On April 2nd, we pay cash for supplies, $50. So the next T account, cash, this time is going to be reduced. So to decrease cash, we credit it, $50. And in return for that, we got supplies. Supplies is an asset. Assets are on the left side of the equation. Supplies increased, so we debit it. On April 5th, we pay cash for insurance, $75. So again, on the 5th, cash is impacted. We paid it out, so it decreased. So it's a $75 credit. And in return for that, we got prepaid insurance, which is an asset, something that we own. Assets are on the left side of the equation, so we debit to increase it. All right, on April 6th, we buy supplies on account from Bale Supplies for $100. This time we're buying on account. We're not buying with cash. So on the 6th, we have accounts payable, which is a liability on the right side of the equation. So to increase it would be a credit of $100. And the other side of the equation, we have supplies, which is an asset. To increase it is a debit. And then finally, on the 9th, we pay cash on account to Bale Supplies of $50. So we have a debt of $100 with Bale Supplies. Now we're going to pay $50 of that. So on the 9th, our cash decreases by $50, and our accounts payable is going to decrease by $50. To decrease an accounts payable, we record it as a debit. The $50 accounts payable debit decreases accounts payable. It decreases our liability.